Once again, I welcome all of you all to the second session of the seminar on diamond market dynamics at large and US consumer demand by the owner of Iran Golan Diamond Research and Data. Iran Golan Diamond Research and Data was formed to provide research analysis and consultancy services for the global diamond industry. Their sphere of activities ranges from in-depth data analysis based on their own detailed data, research of the diamond mining, wholesale and retail market, rough and polished price analysis, and more. Iran Golan, a veteran of the diamond industry, researching and writing about it since 2001. He specializes in a wide range of topics relating to this unique industry, including the way it operates, wholesale and retail, polished diamond prices, the rough diamond sector of the diamond pipeline, and investment in diamonds. He holds a BA from San Francisco State University in Broadcast Communication Arts. His extensive experience and leadership in this industry makes him a prominent voice. Please join me in giving a warm welcome to our next speaker, Mr. Iran Golan.
Thank you. Good afternoon. Can you hear me in the back? We didn't do okay. Good afternoon. A lot of bright lights. I'm going to talk today about the diamond industry, and I think we are at an interesting time in the market. There's a rise in lab-grown. There is a series of issues around natural, and a lot of questions about where the market is going, how it should go, how is consumer behavior impacting demand. By the way, you'll see that my conclusion at the end, I'll jump to it immediately, is that is where everybody's focus should be, on the final frontier, which is the consumer market. Does it work? There we go. So not surprising, this is global production over the last 20 years or so, and what we're seeing is that in the last couple of years, production is down. It's not down because there's a shortage in diamonds. It's not because it's difficult to get it out of the ground. It's down because consumer demand is declining, plus a combination of a couple of other effects that we'll take a look at them. But you see the prices are down as well, and that's one of the most important components. There's always a question, what does these figures in terms of dollars mean? And if you want, we can talk about it later. But the bottom line is this. Production is down by volume and by value, and the drop in value is outstripping the decline in value, in volume. If we go one step down to the midstream, I think these are the figures we should all pay attention to. I'm going to use a different laser pointer, pardon me. So first of all, not surprised, there's a decline. The last figures are imports, everything else is exports. So what we're seeing is that India is down in a significant way. Same for Belgium. Belgium, part of the issue there is not just a decline in demand, but also the impact of G7. The initial stages resulted in sort of hesitance on the part of the midstream, and people chose to divert their rough elsewhere. That means that there was also an issue with polish. People didn't know, doesn't impact. This is part of it. Israel is an interesting figure. So you see that despite a very sharp rise and decline in value, there's a sharp increase, almost a doubling in volume in its exports. And the reason for that is that the Israeli market that was traditionally 1 carat and above, very quickly in the last year or so, shifted gears and is very focused on smaller goods, so that allowed it to increase its exports. Part of that means that the Israeli traders understood where there's an opportunity, because this is an area that they didn't operate in. All this is nice and good, but the bottom line is this: Americans are bringing in a lot less goods into the country. So part of it is sales offices, but there's no point holding the goods there if there's nobody buying them. If we look at overall jewelry demand, and I'm purposely looking at overall, I'm not talking about diamonds. These are pearls here in this photo. Jewelry business is up in the United States. These are the latest figures, I think up to June, if I remember correctly. But we see that it's up. There's an estimate. This is by the US government. I can share with you that historically these numbers tend to be revised, and usually, almost always, revised down. But the trend is very clear and it's very obvious. This is where we're going. China, there is a revival. You'll be surprised, but the revival has to do with the fact that they're buying more gold jewelry. Why are the Chinese buying more gold jewelry? Because, like the rest of Asia, the Chinese consumer is first and foremost value-oriented. They feel there's no value in diamonds, whatever you call diamonds, natural or lab-grown, but the bottom line is that they're buying gold. They're buying jewelry. Japan is Japan. It's going to be flat, which is kind of interesting considering what's happening with its economy lately, but demand for jewelry by the Japanese consumer is relatively steady. Hong Kong, going through a very difficult period, primarily because it's a trading center. And I want you to pay attention to this graph, this line graph for a moment. And I want to explain it. Share of wallet means when we look at consumers' money, discretionary income, meaning this is the money that I don't have to use to pay my car loan or for tuition. This is money that I can spend any which way I want. I can spend it on a golf course, I can spend it on a vacation, or I can spend it on jewelry. And if you see that over the years, and I want to point out a couple of highlights, but over the years what we see is that in terms of share of wallet expenditure of the American consumer on jewelry, it's constantly declining. But there are a couple of anomalies here, and I want to point them out because they're not really anomalies. They are not only expected, but they could be predicted. So following a crash, this is the deep down, this is after the dot-com fell, a little bit of a revival in the American economy, but then the 2008 calamity, financial calamity, you see that it wasn't until 2008, 2010, 2011 that there was a rise, and then the same long-term trend continued all the way up to COVID. In COVID, there's this insane jump. I'll put these in perspective. Expenditure on diamond jewelry alone was up 55%. It's something that never, ever, ever happened in the history of the jewelry industry, the diamond jewelry industry. But since then, we're seeing a decline. We are back to the trend, to the long-term trend. So these elements are nice and fine, but they're temporary. That is, and here's my tip to you, if you see that everything is going very, very bad, primarily because of external forces, the thing to do is to prepare for a rise in demand. And I'm not going to say buy goods, I'm not saying buy rough, I'm not saying increase production, but keep in mind that this is what usually happens. The most important thing, by the way, is that if you expect things to change dramatically in the United States, unless there is a major disaster, it won't happen. So let's look at that natural diamonds. When I say diamonds now, I mean natural. We're going to look at lab-grown in a minute. Natural diamonds demand, jewelry sales globally, estimated to at 85 billion. Some feel it's a little inflated, but I think it's an accurate expectation. Diamond jewelry market is flat after a robust jewelry demand. China is flat. We know why. Local demand in India is doing very well. Consumer demand in Japan is shrinking, primarily because it's an aging society. So people don't spend as much. There's not as many people to spend that much. And the bottom line is, if you consider what I said about jewelry in general is doing well, at least flat, depending on the market, the diamond jewelry within the jewelry business is losing market share. This is by value. The question is why? What's happening on the consumer side? Once again, I'm talking here about natural diamonds. Diamond engagement rings is the most important item globally. And I'm talking about diamond engagement rings in the United States is the most important component, most important product, most important subcategory anywhere for the entire diamond industry. Why? Because the United States is half of global diamond demand, a little more. The bridal sector is half of the American sector of diamond jewelry demand. And then the bottom line is that the engagement ring is the product. That's where all the money is spent. So the fact that there's a decline of 6% is a worrying one. Average transaction value, however, is up. A couple of explanations why. First of all, competition with lab-grown. Those that go to lab-grown go for a smaller expenditure. Those that can afford to spend more will go for natural. So the bottom part is kind of disappearing slowly, but the top is doing well. There's another reason for that, and this is an interesting one. There's a halo effect with lab-grown diamonds. Lab-grown diamonds, one of the drivers for this demand, is bigger and bigger diamonds. But what happens here is that it created a feeling that this is what we should do. We should buy a bigger diamond. For decades, I mean literally for decades, the average size was about a carat. For the past, since the start of this year, it's been over 1.3. In June, it was 1.36. That was the average. I didn't look at the figures for July. Market share declining constantly, losing market share to lab-grown. We are nearing the turnover spot. If it will happen, I don't know, but we're already close to a 50-50 market. If we look only in loose, so the way we look at loose is this. I'm counting loose as what comes into the jewelry stores as loose, even though it's sold later on as part of a usually ring, most likely an engagement ring. So loose sales year to date are down 6.4%. Goes hand in hand with the fact that engagement rings are declining at a similar rate. By units, not far from it, but the average transaction value is moving up. Once again, the same two reasons. Larger diamonds, and the bottom is slowly buying a lot. The lower price points are selling a lot less. There are reasons for this, and all of it are tied one way or another to the consumer market. So first of all, there's lab-grown. 14.5% market share is by value for only diamonds. So the diamond universe is natural and lab-grown. 14.5% is lab-grown. Less marriages in all of the major markets. In the United States, for example, there are about 2 million weddings a year. Consistently. which is kind of surprising because the population is growing. What we're seeing is that the average age remains kind of steady, around 29, 30 for men, 28 for women. And more Americans, though, are what the American U.S. Census Bureau calls cohabiting. Cohabiting is defined as those that live together, share a bank account, own a house together, they have kids, right? Could be a combination of these. But at the end of the day, they are a couple in their own eyes. They are married in the way they view themselves. They just didn't go through the entire process. The problem with this is that often there is no big celebration. We decided to live together, now let's kind of announce into the world. When you don't do that, there's a good chance you won't buy an engagement ring. China, there's a decline in marriage rate. There's a lot of reasons for that. Japan, as I said, is a decline in population. Economic uncertainty, China is clear, Japan is now. The United States, just what happened last week, the past few days, scared the hell out of the financial market, and the American consumer tends to react to it even though they may not feel it immediately. The first thing that they do, tighten their belts, even though they have what they call spending budget. They have money set aside, earmarked, even just in their mind, as this is for spending on whatever makes us happy, vacations, etc. Political uncertainty. So in the United States, this is an election year. Every time there's an election year, there's a lot of tuggling. One side is calling the other side by whatever names. And this year is a little worse than it was in the past. And I think it's important to pay attention to the elections in the United States simply because diamond jewelry in the United States is primarily purchased on the coasts and in the big cities. Politically, that's where the Democrats are. Democrats live on the coast primarily and in the big cities. Republicans live in smaller towns primarily and middle America. A lot less jewelry business going on there. So think about it. If Trump wins the election and you're a Democrat, your response is uncertainty. I don't believe this guy, he's horrible, he's crazy, he's this. The whole thing is going down the tube, I'm not going to spend any money. That's going to hurt the diamond industry. Kamala Harris, on the other hand, if she gets elected, then the Democrats, those living in the bigger cities, the heartland, and on the coasts, will say, look at this. We were able to succeed and we got what we needed. Future is bright, and they'll spend more. Hopefully on jewelry. It's not going to have a huge impact on business, but it will be enough to be noticeable. In the EU, we see that everything is shifting to the right. It's not necessarily good or bad from the perspective of the diamond industry, but whenever there's a feeling that something is changing, we don't know exactly why, and it's kind of a feeling of instability, our reaction is to decrease our expenditure. Another issue is lack of marketing. Think about it. Today's consumers, right, if we say that the 29-year-olds are those that are buying engagement rings, and that is the most important product, when was the last time they saw an ad promoting just diamonds? A diamond is forever. When was the last time they heard, you know, this is kind of interesting, you should check it out? In whatever form. Very, very little. The last time that ran was in 2009. These guys were kids. They couldn't care less about it. And then there's a shifting in consumer perception. So ineffective marketing, we already said that. Changing norms that the diamond industry did not address. Industry did not adjust to the changes at all. Let's look at lab-grown. Lab-grown itself, this fantastic new product that conquered green fields everywhere, is now finding itself also being challenged in a couple of ways. So we're starting with an increase by both unit and value. These are figures for the first half of this year. Sales by jewelry retailers in the United States. But not surprising, with the value increasing to a lesser degree than the sales of units, this means that the average transaction value is down year over year. This includes both finished jewelry and loose. If you look at the diamond engagement ring, look at this going up 2% by value. But by units, it's up by 25%. Let that sink for a moment. If you are a retailer and you sell if you sell engagement rings, you have a big consumer base, right? We said that a minute ago. That's a 14% market share of everything, of all diamonds. You have a consumer base that wants to buy more, right? It's buying a lot more, but it's not willing to spend as much. It's decreasing its expenditure. I'll give you one number to keep in mind, a range. For decades, once again, for at least the past 20 years, 15, 20 years, the average price, retail price, of a diamond engagement ring in the United States was anywhere between $3,200 to $3,600. Steady. Went up a little bit, went down a little bit, depending on the times, depending on the economy, depending on marketing, but that was the range. Just a $400 difference. Today, the average price of a lab-grown diamond engagement ring is about $2,600, $2,800, less than $3,000. Now, there are a couple of reasons for that. First, part of the appeal of lab-grown is that I spend less. There's a change in norms. This is one of the things that the natural diamond industry failed to address. It used to be that a guy will consult with his brides-to-be best friend, sister, parents, and then went out and bought a diamond engagement ring. That isn't the case anymore. Today, he'll come up with a symbolic engagement ring, pop the question, and then walk with her into the store. Now think about the psychology of it. The nice thing is they're picking out together. She's going to get exactly what she wants. However, she's now involved also in the economic decision. Now it's not just him spending on me, now that I'm spending on myself. And when we spend on ourselves, sometimes we tend to be a little cautious. Think about the circumstances from an economic standpoint, from a financial standpoint. They're still paying off their student loans. They have a car loan. All Americans have car loans because that's how they establish their credit worthiness. They are facing some big expenses, right? We're looking at a wedding, we're looking at a honeymoon. But then the biggest thing is that they're looking at what is coming up, and that is buying their first major expenditure, that is buying their first house. When you buy your first house, you want to be able to say, you want to put in the biggest as possible down payment. You save everything, everything. So this is what's impacting this, and this is part of the issue. The question that should be asked along that is, if a diamond engagement ring was always a show of value, right? Because we never used moissanite. Moissanite was available. We always used diamonds. We never used silver. When platinum, the cost of platinum, was higher than gold, all of a sudden you saw an increase in engagement rings in platinum. Once platinum fell below gold, zip, it disappeared. Spending money, showing that you can spend your money on an engagement ring has importance. That was part of the appeal, by the way, with lab-grown. So I can buy a bigger diamond, right? My girlfriend got a 1 carat. I can show her that I have a 2 carat. Higher color, better clarity. So all those things are interplayed into this. Total sales value is down. Unit sales are up dramatically. That means the average transaction for everything is down 22%. Basically, from the standpoint of the American consumer, from the American retailer, their average transaction value is down 22%. Let's round it up. Let's say it's just 20. If your business is heavily reliant on lab-grown, a fifth of your business died. Now, what do you do next year? These are real questions that American retailers are asking. If you sell to an American retailer, you need to address that. Because if you just want to maintain where you are, that means you have to increase your sales by 25%, right? Just to be the same. Now, each and every one of you, think about your income and think about how difficult it is to increase your income by 25%. They can't, one way of doing this usually at retail is by increasing price, but they can't. That's why many American retailers are starting to think about their heavy involvement in lab-grown. So we spoke about this. This is not news to you guys. We're looking at price compression. Everything is heading towards $100 per carat. That means that if you are a grower, you don't want to grow small stuff. You want to grow bigger stuff, bigger stones, because you can get a better profitability. But the other trend, and this is important and kind of good news for the lab-grown industry, is that, let me point this out, this. Prices are tapering off. There's a stability coming in. So the fat gross margins shrink. And now what's dictating price is, first of all, their costs. This is market share over time. Look at this. 14% units. You know what? Let's go back one. You see, first of all, that units and value is constantly rising. And it's kind of similar. Here, diamond engagement rings, same thing. But look at the difference between 14% market share over here and a 45 market share over here. More importantly, look at this is only 25, where this is so close to the here. The reason for that is, once again, if I want to buy an engagement ring, I'm doing this lab-grown to save money. Otherwise, I have a budget. I'm going to spend $1,000, $500, $2,000, $5,000 on a jewelry item. A lot of it is self-purchasing. And that's my budget. And what I find that works. And if you tell me that for the same budget, I could get something bigger or nicer, there's an appeal to that. So let's talk about retailers a little bit more in depth. These are the guys that you have to talk with. So this is their view on lab-grown. As I mentioned earlier, average transaction value is falling. 22% year over year is a drop. Even if they're partially in lab-grown, if it's only half of their business, it's a 10% decline year over year. It's impactful. It's important. Revenue is eroding. That's the result. And they're thinking about what they're going to do about it. I want to talk to you about two different types of retailers for a moment. One retailer is a company that sells below $500. What's called in the United States price point. The price point retailers loved lab-grown when it just came out because all of a sudden their margins were great and they could sell nicer goods. They're not stuck with PK goods. Now they could sell GH, GIs, SIs. Fast forward 4 years, and now all of a sudden, they're losing money. I mean, literally, year over year, they're losing money because they're so lab-grown heavy. The only way for them to move forward is to transition away and go to lab-grown. By the way, there's another, I said 2 models. The other model are those which you walk in with a certain budget in mind to start with. Those guys loved and still love lab-grown simply because of the difference in gross margins. The gross margins on diamond jewelry, natural diamond jewelry, is around 30 to 40%, depending on the item. But for lab-grown, we're looking at margins upwards of 65%, regardless of what kind of item we're talking about. So if the consumer's budget is the same, what you want to do is keep it and keep them at lab-grown because that works for you. But here's another issue for those same retailers. If you walk into a store and you spend $5,000 or $4,000, you view this retailer as a luxury store. Luxury store, and I'm going to give you an extreme example, think Tiffany, very high-end, but the idea is that there are no sale signs outside. So now you spend $5,000, you bought whatever carat diamond, lab-grown, you come back 2-3 years later, and you see the same stone, the same item sells for half the price. How do you view that store now? They used to be luxury because I want to keep my own perception of what I bought, and now they're not anymore. What a pity. So if I want to spend more, if I want to spend in the thousands, I'm not going to go back to them. That's what worries them. Their way to combat that is that when you walk into that store and you say that you want a diamond item, and they ask you what's your budget, and you say to them that you're interested in lab-grown, one of the first things they will say to you is, terrific product. But if you come back in a couple of years and you want to upgrade, that is not going to happen. No buybacks, no upgrades. And when the customer asks why, what they say to them is, well, guys, we don't know what the value will be. I trust the value of gold. I trust the value of silver. I trust the value of emeralds. I trust the value of natural diamonds. But lab-grown, I don't know. So if you're in the lab-grown business, you have somebody out there that on one hand is generating money for you, right? The retailer is selling your product. But on the other hand, he's sort of bad-mouthing you. He's presenting you as something that is not that valuable. That is an issue that you need to address. Bifurcation is definitely possible. So fashion jewelry versus luxury. Think about what that means for the natural diamond industry. If you are a miner and the majority of the goods that come out of the ground are SIs, PKs, smaller goods, half a carat per ton, if we think about this in economic terms, $100 per carat per ton, whatever it is, all of a sudden, you're not an interesting product because you don't have what to sell. Is it economic to run this mine or not? It's kind of the decision that they'll need to come to. I can share with you that a fairly large miner consulted with me on a quarterly basis about the price of lab-grown and the makeup within the retail market, what was selling, only to make up their mind on when to close a mine. They wanted to pull that mine as long as possible, but they didn't want to go beyond the point where they were afraid they won't be able to sell their goods. One miner, one mine, but why wouldn't that go wider and to other areas? So there's a very big possibility that this will happen, with a few exceptions. So one model is let's say the Pandora model, well-branded, but low price. Another model is that it will remain as an interesting product for engagement rings. That will require branding and a lot of marketing. We'll talk about that in a minute. As for natural, there's going to be maybe only a high-end feature with a very high price. The big question is, of course, what's going to happen with engagement rings? If there's one conclusion out of all of this, and I'll sum this with different words, there is consumer demand. Obviously, all of these numbers say that for lab-grown. But retailers are those that are putting up the resistance, and they are your agents to the final customer. Without them, you have a problem. So make it easy on them, and it has to make financial sense. They will go with it. The consumer demand is there. It's easier for them to go with the customer, with the final customer, with the guys that give them money. But it has to make sense financially. So who is this customer? First of all, 85% of them are Americans. Hardly any business outside of the United States. A little bit in China, a little bit in India, a little bit in Australia, a little bit in the UK, but to a much, much lesser degree, and the volumes are not there. 30-somethings and younger, as I said, they were not exposed to a Diamond is Forever or to those sort of promotions. College educated. They're very price-oriented. I mentioned that earlier. Getting a bigger diamond, being able to say, you got a 1 carat, mine is 2. Uses, what did they say it is, an SI? Let me tell you something about diamonds. VS trumps an SI any day. Same but different. The ability to personalize is very important, and without it, the American consumer, this consumer, doesn't want to buy the same as what their parents bought, so they need something that is different. This is your typical American consumer in this regard. Self-buyer, Gen Z. Last year, their expenditure on jewelry, everything, not just diamonds, more than tripled. So if you're asking yourself who's buying lab-grown, she is. Where do we go from here? Very quickly, focus on the consumer market. Those are the guys that generate demand. Younger generation, obviously 30 and below, because if both natural and lab-grown. Lab-grown, that's where your audience is right now. Lab-grown, that's where your audience is right now. Lab-grown, this is where natural, this is where you're losing out. So you got to focus on them. Be value-oriented, not price-oriented. In Asia, from Japan all the way out to the Middle East, beyond that, all the way out to Morocco, it's all about value. That's why gold is doing so well in India, doing so well right now in China, etc. The American market is very price-oriented. The Europeans are very design-oriented, right? Very distinct markets. But the American market is very price-oriented. Think about the proposition of lab-grown. Same, but cheaper. Wasn't said that explicitly, but everybody understood it. So the pressure to reduce price was insane. And because the margins were so wide, it was kind of easy. Another percent here, another percent there, what's the big deal? It's $1 here, it's $1. But eventually, it turned into a tidal wave. It started off at the wrong place for lab-grown. So if you talk about value, you're talking about a completely different set of values. You're selling design, you're selling, let's go back to Pandora for a moment. Think about Pandora. Pandora did very well in a $200 to $500 market. Their customer were parents, primarily, of young girls, young teenagers. My 15-year-old daughter is gaga over Pandora. The fact that I talk with Pandora every once in a while, she's, Dad, so you're going to get me anything right? I'm like, well, not so fast. Adding lab-grown to their mix did 3 things. One, all of a sudden now they have a product that they can sell for $1,000 to upwards of $2,000. Secondly, they have a new client base. Now it's young adults, 16, 18, 20, 25. Third, the added cost, because of the size of the diamonds that they're using, is marginal. Now, it's not a major product for them yet, but it will be. So here's a company under pressure because it's a public company, found a way to move forward. This is the kind of direction that LabGrown should consider. Address real consumer needs. There's a lot of talk about traceability. Consumers say, yes, it's important. They don't really care about traceability, I'm sorry to say. If they are looking at two products with the same price and one has some traceability or environmental claim, great. But then they will choose about price. If there are two products and they have to pay a little premium, they won't. The bottom line is this: be this. No for sale sign, no sale signs, no discount, no summer specials. And not this. I'm kind of cocky here. I found a picture with a lot of people in one, and then I had an opportunity for a photo with nobody. But this, you are Zales and an outlet and 20% and 70% off. What's going to happen the next time I walk by a Zale? I'm going to go to the other mall, the end of the season, and I can get the same thing for a lot less. This is not generating sales for Signet. Invest in support marketing. That's the only way to go. Do it throughout, branding, focus on consumer. That's the bottom line. You worked hard. You got to this point. Not the time to buy a yacht. Not yet. Thank you. Questions? Yes? Let's.
Thank you, Mr. Idan. We will now have the Q&A round. If you all have any questions, feel free to raise your hand and the mic will pass around. Any questions? Please feel free to raise your hand and the mic will be passed around.
We can't hear him?
Thank you for the session. It was very informative. Yeah. And it really helped me understand how the diamond market works. You had mentioned that Middle America is not a market for diamonds, but could it be? Because they are more family oriented, they are getting married. So is there a pitch to them which could work, which hasn't worked before?
Well, they are a market, but keep in mind the following thing. First of all, less populated. Secondly, income tends to be a lot higher on the coast in the bigger cities. And something a lot less showy about Middle America, right? Your thing is, I'm wearing a baseball cap and, you know, my father owns some fields out somewhere, right? We're cotton growers. In the city, the idea to show who you are and your success is a completely transformative thing from the standpoint of being a consumer. And that is where it comes. I'm not saying that they don't buy, but at the end of the day, that's a toss-up. I'll give you a simple example from election results. Even in elections where the Republican nominee won the election, they did not win the popular, oftentimes they did not win the popular vote. The majority of people voted for the Democrat, but just because of the way the electoral system is built, they got elected. So that's the thing to keep in mind. It's definitely a market. I know of a bunch of stores in Middle America that are doing exceptionally well, and very high average transaction value per store. If the American typical store is around $2 to $3 million per door per year, I know a bunch of them that are $20 million, $30 million per year in those areas. So it's not that people don't spend. It's just a lot less populated, and the average transaction value in general is a little bit lower.
Thank you.
Sure. In the back?
Hi, good evening, sir. When we're talking about lab-grown diamonds, I'm talking about especially solitaires. How do you create a brand or a niche brand which differentiates itself from other ordinary lab-grown diamonds? Because when you talk about a brand, in other things, it's an aspirational value which is visible. You're wearing a one blank pen, there's a star on it. You're driving a car, there's a star, you know it's a Mercedes, it's a BMW. How do you create that branding part for a diamond in which any other diamond is the same? And when you're wearing it on a ring, you don't say, okay, I'm wearing this brand, I'm wearing this brand. How do you visibly satisfy that aspirational value?
Well, there were many attempts on branding diamonds in the past, including Forevermark and Hearts on Fire, and they did not succeed in the United States. You're right, it's difficult. You look at a diamond, how do you know that it's from one company, not another? Because when you look at, say, a Cartier piece of jewelry, you don't have to see that it says Cartier, you recognize it immediately. So the success in that regard does not come from branding the diamond, it comes from branding the jewelry. And once again, you know, when lab-grown folks approached me 2-3 years ago, I always gave them the example of Swarovski. And in many ways, that's exactly what Pandora did. If you walk with somebody who's not knowledgeable about the industry at all into a Swarovski store, there's a very good chance that they will think that those crystals are diamonds. And I've did this with people repeatedly. People are sure that Swarovski is a diamond company. It's not. What it sells is, first of all, its name, right? That's a brand. Secondly, they have fantastic designs. Once again, this is true for both them and Pandora. Fantastic designs, excellent workmanship. A jewelry item will last forever. And they constantly change their designs. The reason for that is those that know that jewelry and know that those brands, that generates a sense of urgency. You walk into a store, you see something that you like, and you cannot say to yourself, you know what, let me think about it, I'll go out, I'll come back in a couple of months and then buy it. It may not be there and never return. If you want it, you have to buy now. And creating that sense of urgency is very important. And those are very important components of selling jewelry in general. It appeals to me, I trust the source, I know who he is, who they are, and that's why I'm willing to open my wallet. And that's true for any product in any area, generally speaking. Then in each field there's their own specialty, but that's the idea with jewelry in general.
So basically, to summarize, branding is more of primarily of jewelry, not for the raw material, the rock or the diamond that is being used in it. It's more for the design, the jewelry.
Look, the business model today, the successful business model today, and I hope I'm not offending anybody, but being just a grower today is bringing you to the point where it's very, very challenging economically. The very least for a successful model is to be a grower manufacturer, and the successful among them are those that are also jewelry manufacturers. So they capture the entire value, and they can afford to not be very profitable at the first stage, for sure, and then capture the money at the very end. So if you have beautiful jewelry and it's lab-grown and you're inclined to buy lab-grown, Why not buy it? Thank you. Lunch? Drinks? Drinks. Okay. Thank you very much.
Thank you, Mr. Idan, for that insightful presentation on the diamond industry.